B, what's up?
E-Money the greatest. How's it going?
I'm all good. How you doing?
Doing good. Doing good. So, hey guys, I don't know if you've seen it, but there's been a couple of recent changes in the community. So let me go ahead and just share for everybody. Hey Calvin, how's it going? You there, Calvin? Oh, you may be connected to audio.
Yep, I can hear you. How you doing?
Doing pretty good. Doing pretty good. Hey, so yeah, there's been a couple of changes
I'm on
in
my
the
phone right
community.
now.
Oh, okay. Okay. But yeah, I was saying there's a couple changes in the community that's been made. We're trying to open it up to make sure that more people get access to learning trading, right? Whether it be, especially specifically on supply and demand or trend trading or price action, whatever we want to call it. So we've made it now where in Discord access is now dropped to a monthly price of $25 a month. There's also a yearly option that you can subscribe to, but the actual trading course itself from Precision Markets has been made on the internet. So it's actually on YouTube. So you can go watch this YouTube playlist and be able to access all the content. Also, all of our past office hours calls have been uploaded as well too. So if there were things that you happen to have missed and little nuggets of information that you want to get from them, make sure to, subscribe to our YouTube. Actually, there's a podcast now with it on YouTube so that you can be able to access it from anywhere. So now all those questions that you got to ask, all the charts that we got to show, all the examples we got to show, all the information is accessible to at your fingertips, and you'll actually no longer have to use Teachables. But we're opening this up to the community to make it beneficial for our Discord members, and making sure that also the Discord members get first and priority access to be able to ask questions and be able to get questions answered regarding trading, so we can help you to be able to make sure that 2023 is your best trading year. We'll also be having some other events upcoming in the year, including a boot camp where we'll be basically going into an intensive 4-hour session, going through everything that you can learn, everything you need to know for trading to be able to take your current skills and advance into the highest level so that you can maximize the most out of the market. So more details on like the boot camp will be upcoming, but just to let you know, we'll still keep our Tuesday, Thursday format of our office hours calls. You're going to see new faces, hopefully. And we'll also have a lot more questions, but it'll also be accessible online so that you can access it on YouTube as well. So I just want to share those updates and exciting things that we have going on that's really going to help you to be able to take the most of your trading. So
Great.
hello there, Paulina. But for those that are new, it's your first time on the calls. This is our weekly Precision Markets office hours. Our format's pretty simple. We allow it to our Discord members to be able to ask any questions. Feel free to come off mute. Also, you can ask questions in the chat. I'll answer them in the order that we come. You can always feel free to share a chart if there's things you want to show us and see and etc. But with that, I'll go ahead and turn it over to y'all to ask the questions, and we'll get this thing kicked off.
Hey, Brian, can we go over gold?
Yeah, sure. Let's take a look. Give me un momento, my friend. Gotta find my stream. All right, so here we go. Talk to me.
So first of all, I tried to have gold in another pair today, and it messed me up. I just don't think more than one pair is good for me right now. So I need to get it out of my head. But what I did change, that talk we had was like my risk management. I only take a certain amount of trades a day. So I'm happy about that. But I've been trying to go to more than one pair, and every time I do it, it messes me up. So I have to just quit that out right now.
Well, I mean, how else are you looking at your charts? How do you manage how are you managing looking at two pairs in the first place?
Well, it's just that like me, it's like obviously like the concept, sometimes some things I will forget, but then I will correct myself if I'm just focused on that one pair. But if I'm focused on two pairs and then I take a trade on one pair already, and then so it's like on the other pair when I'm like, oh no, this is the right way, I'll end up messing up and mess up for the whole day. And my rule is my rule is 3 to 4 trades a day. And I know one pair is not going to, well, it can, but one pair most likely is not going to take me out 3 to 4 times. So if I focus on that one pair, it won't mess me up as much like like 2 pairs would. I'm just not, just for me right now, I have to be more focused.
Yeah, no, you definitely have more focus. You definitely require more focus the more that you have multiple pairs, right? But there's also ways that we look at, I don't even say it's risk management, but it's just like, it's like your day management, right? So everything you do in trading comes down to routine, right? So the way you look at the charts, the way you analyze, what you get up in the morning, eat for breakfast, how do you de-stress at the end of the day? That's not always talked about in making a trading plan, but it's important to be into what's your routine that you follow, right? So write that. If you do want to go back, for instance, one day and do multiple pairs, then you need to also kind of write out, how is your plan of managing? Like, how do you manage looking at 2 pairs at one time? I watch 6. So lately I've been watching 8 pairs at one time a day. It's only required me to spend an extra 5 minutes per day. That's it. But it's because I have a routine down in which I'm able to look at multiple pairs, right? You can see on the left, you can see on the right on my screen, like my pair list as well. So, but yeah, that's something just to keep in mind, brother. But if you do focus, there's some people who can focus on, like, for instance, one pair is beneficial because there is sometimes a lot of attention to detail that you do miss if you have multiple pairs. That's going to come down really to a proponent of how do you have your system set up to look at the market.
Exactly. And my system is not that complex. And obviously I still want to hone in on this supply and demand strategy, which I want to, perfect it 100%. I know you perfected it. So, I mean, once I perfected, more than one pair, it won't be bad, but I need to focus on one pair, like no ifs and buts or maybe. I have to just stick to that.
Yep. And that's, I mean, I know you asked the question in the group about risk management, right? And like I said, there's a certain number of trades per day, because honestly, in the conversation we had a couple of weeks, I don't know if it was last week or week before last, when you were asking, just a tip, and I said, ask yourself why, right?
Mm-hmm.
So if the market is not showing conditions that are favorable, why would you get in, right?
Mm-hmm.
That's why I said, like, always comes down to why, right?
Mm-hmm.
So the same thing is like, if you're missing details in anything you do in your trading, ask yourself why. Why do I feel the need that I have to do this? What is the benefit for me doing it? So for you right now, like you said, it's not, watching multiple pairs is not beneficial for you, right?
Yes.
It's not completely ruled out. It's something you can do later on, but you have to figure out your why. And it's a good point. You've made a goal, right? When you feel like you have mastered your process, then that's when you consider do it. And anytime you get the temptation now to go look at multiple pairs, oh, this is the why I have to do it this way. Because if you forget the why, you'll break the rule easy.
Yeah, because I've been going back and forth. I'll do one pair, then I'll do 2 pair. And now it's like, now I had to get that out of my system. I've been going back and forth, But one thing, I do have my risk management down. I got that out the way. So I have to get this. I don't care. It's just one pair. If my one pair is trash for the day, that's fine. I'll come back tomorrow. And that's what it did today. Like, gold was tripping yesterday, but today it hit a home run. So I have to just, stick with the process.
Mm-hmm. Well, the whole market hit a home run today.
Exactly.
Not too surprising, but it's the reason why I haven't traded. I didn't trade yesterday, and I definitely was not trading today. I don't even watch gold anymore, so that's on my do not trade list. So I missed any kind of opportunities that much more in gold, but market as a whole for most pairs was not moving with any kind of enthusiasm over the last week. And as you notice today, the market really didn't move. So there was a reason why, because they obviously were waiting to see what in the world Fed Chair Powell really had to say. And so that caused the market sell off or rally, depending on what you looked at. So
and then the summary of his speech was what?
So he was testifying to Congress. He has to do that 2 times a year, and basically kind of tell them an update based upon their projections, what they see, and etc. So it was more or less Congress people questioning him on monetary policy, the things that they're doing, how's it affecting everyday citizens, where do they see projections, etc. So It's kind of a crash course. Sometimes you'll see people throwing political jabs in there at the other side of the aisle. Sometimes you see them asking questions that really seem to have no relevance, and then you see them actually asking really tough questions to them. I wrote a couple things that I thought were interesting from his comments that were kind of aha moments inside our Discord chat. But I think the one takeaway I'm gonna leave for this call, the rest you can see in Discord, is that the terminal rate may go higher than the previous range that he gave before back in October, and that was considered to be high, right? So we were probably looking at this year they're going to do 3 interest rate hikes, one time in February 1st, another one in 2 weeks, and then another one in somewhere in the middle of May. Now it looks like either the next rate hike may be bigger than what people expect, or there are going to be more rate hikes for the course of the year. The implication of that is that the dollar is going to be stronger, right? So that might mean Euro USD is going to drop, right? So maybe it might come down to some levels. Let me hop over real quick to weekly, but maybe it might come down here into a parity level, right? Because right now it's fighting to see on a weekly basis, can it stay above this? It's already tapped into some demand here, but can it, bounce from this demand zone, go higher? We'll see. This may be the dead cat bounce, as they call it in the stock market. So, then you have, other pairs like GBP USD that also might end up taking a drop if the dollar stays strong. The other economies are recovering pretty well. You got UJ that, could go back up, but if it gets back into this region, remember, this is the area where the Bank of Japan sent prices down. They made one move somewhere here in October, November, and you notice, look from a weekly perspective, price kind of went down. Calvin, this goes back to the question the answer that I told you in Discord about the fact that you may not see news play out every day, right? But news can change fundamentally the decision of how the market continues to trend for a long period of time. So we're talking, this is October 17th. It can continue going down until January. Now, if you're looking at more intraday movements, you won't see it or notice it as much because you'll be looking at other trends. But if you look at it from a bigger picture, yes, it does. News does affect it, and fundamentals can alter the course of an entire currency. So here we have 2020, which was the pandemic. Price makes a higher low, price goes all the way back up. Make sense? But so we can look at, because you're using 4 hours your higher time frame, right?
Yeah.
So yeah, talk to me through what you were thinking today, questions you have for today on gold.
So on the 4-hour time frame, on the 4-hour time frame on gold, on the 4-hour time frame, it made a new high. You know what? Let me share my screen.
Cool. Have at it.
Oh, it's loading. You got me?
I can see you, brother.
Okay. So, okay, hold on. So the 4-hour time frame. So this right here was the whole 4-hour demand zone. It was a whole 4-hour demand.
Okay.
Price made a new high. So I end up going to the 1 hour, but I know I probably shouldn't have, but I looked at the 1 hour and then I seen this zone. So I'm still thinking that we're going to push up. So on the 1 hour, I go to the 3 minute today. Oh, this one I messed up on what I was looking at GU, but yeah, but hold on. So I'm up at I see a bearish movement. So yeah, price never. Okay, then this is about 5 a.m. and then the candle never this 1 hour candle never closed. So I'm thinking like, okay, we might go back up. It never closed below this 1 hour zone right here. Higher, higher, low, higher, high, and never closed. So I went to the 1 minute time frame, which I deleted that. That'd be psyching me out. But it never, I believe it chopped on the 1 minute. I'm not sure. But I guess because I was looking at GU, but maybe if I was looking at GU, I would have caught this. That's why I'm irritated. I'm on more than one pair. So I just want to know where was I wrong for going to the 1 hour? And excuse me?
Yep.
Yeah, exactly. So 4 hours my higher time frame. Then I should have went to the 15 minute. But why was I wrong? Why was I wrong? Because this is still a 1 hour zone.
Yeah, but remember we've talked about this in other calls. We talked about the relationship between time frames and being able to look at the microscopic view of what's happening. You got faked out.
Yes.
4 hour, 1 hour, too close together. You're seeing the same thing twice. It's not a microscopic view, right? We talked about it before. Go to the 15 minute. Does that influence your decision a little bit differently now?
Yeah, that would definitely. I don't think I even went to the 15 minute on here.
Yeah, that's the pairing that you should have used. Now, let's talk about this real quick. All right, zoom out just a little bit, and I want you to pull up the brush tool. I don't remember where that's at on TradingView ever. I think it's there. Yeah. Okay. Yeah. Highlight doesn't matter. Brush highlight doesn't matter. All right. All right. Price makes a bearish move here. I want you to circle that. Right. And then, yep. Price makes a bullish move here. Circle this. We had a change of character and we had a BOS, right? All right, cool. Now, I want you to go to the hour time frame now. All right. So what did that move look like on the hour time frame? That move was contained between the higher low and the higher high. But all you see is some internal movement or internal breaks inside of the 1 hour time frame. You see that?
Yeah.
Now, I want you to go to the 4 hour time frame. What does that look like on the 4 hour time frame?
Just a bunch of big candles.
That's the difference. Those movements on the 15 minute show you what's happening inside of these candles, right? Whereas on the 1 hour, the 1 hour movement, that 1 hour low, you can go back to the 4 hour real quick. All right, I want you to circle this. Oh, and this. Circle these two. Cool. Now go to the 1 hour time frame. So those spots that you pick is literally this higher low and this higher high over here, basically, right? So between those candles that were right there, you barely have a handful of candles in the 1 hour. So what I'm saying is you're not seeing a representation of what's happening inside of those candles, right? And you want to catch the movement, right? Because I said before, you don't trade the 1 hour, you don't trade the minutes, you don't even trade the second time frame. You trade your higher time frame always. When you come to the charts, go to the 4 hour again, and rewind it back to the beginning of the day.
Yeah, I think this is it. It was in here. It's a big, you know how it goes further. This is it right here. But it was right here though.
Go back one. Go back one. Yeah.
Oh, beginning of the day. Okay.
Yeah. When you come to the beginning of the day, you can clear off those highlights now. You can delete those. When you come to the beginning of the day, the very first question you're asking yourself is, what do you think the market's going to do, right? Where it's going to go. So before you even start looking at a lower time frame or anything of the sort, you're essentially making a decision, saying, okay, it's either going to create in your case, a couple of bullish candles. That's what you're expecting. You're expecting some move like this. If that fails, then price would end up making some type of candle, right? Some type of bearish candle. That's what you're saying when you make a decision on what direction you're trading. You're anticipating what this next candle is going to look like. So fast forward one candle, right? Price goes down, and price goes strictly through this zone that you drew from the 1 hour. But it's all about anticipating, can you see what direction is it going? Now, this is all moving in a straight line. Go to the 15-minute. From every kind of movement that price made, where it had it made this strong movement down, strong movement up, and a strong trend going back downwards, right? In order to see those things, you need to pair the time frames correctly. If you get the time frame pairings wrong, what ends up happening is you get a false idea of direction. And I don't really care what else you do in this market. If you get direction wrong, you might as well set your money on fire, because you're going to lose it anyways. Like we don't get paid on stop loss. We don't get paid on tight entries. We get paid on having the direction right. So if price is going to go up, you need to have. If price is going up, you need to be riding the wave there. If price is going down, you need to be riding the wave there, because nobody on this phone call, nobody watching this video probably has the power to move the market. We rely on people who have billions and trillions of dollars to move the market. So therefore, you want to ride the direction that they're going. Every single trader that's retail that has under billions of dollars, that's what they're doing. So that's the secret.
So what do you say about this? Because this was obviously on a 15-minute. This is a zone, and then price does a chalk and comes in here and end up going down. So like, what do you say about this?
You still could have profited from it even before it went down.
As a buy, right?
Sure could have, yeah.
Okay.
Yeah, it tapped into your yellow zone, which I think was your 4 hour zone. You got a demand zone here, right? And it came up. You might have made some profits here, might have made some profits here, maybe or maybe not, right? If not, you would have broke even. Cool. Then the market decided to come back downward. The market came downward. I don't really know if you had a chance to get in on it going downward, but yeah, depending on if you're a breakout trader or a pullback trader, if you're a breakout, you could have got in here, could have got in here. Like, there's opportunities, but you're able to capitalize on these small movements, even when it's like this, as much as you're able to capitalize on the bigger movements like that. But you have to keep in mind, where are you? Why it might happen, right? So it's like everything comes down to a why. Why would the market go up from where it's going? Why would the market go down? Well, a good reason for it going up is it was in a demand from the 4 hour. It made a strong movement upwards. And now it's possible that the market was just going to make a bounce and go upward. Great. That's enough hypothesis to take this trade and possibly get something, possibly get a win, possibly not, right? Depends on what happens. Then it fails. Okay, cool. Now you just switch your bias. Right.
Okay.
Does that make sense?
Yeah. All right. So because I'm like, I should be buying, then okay, then just switch it. It's that easy.
Yeah, it's all about following what they call a narrative. So you want to keep a narrative as to what you think price is doing, and it should be a good story that you can be able to, understand. So You want to always have a narrative. There's always a story and a reason why I take a trade for the way I take. And that's what's the most important thing I think you should have as a trader, just have an understanding of why. You don't want to just be doing stuff aimlessly that could eventually cause you to lose money, you know? But all it takes is one candle to change my mind. That's it. If the right thing happens, one candle change, boom, change the bias.
That fast, huh?
That's all it takes sometimes. So,
where would you have gotten in here? Is there anywhere you have gotten in? I wake up. I'm up like right here.
No, I didn't. There was not a single trade for me today.
Okay, so you wouldn't have gotten nowhere in gold. There's no trade that you would have got in.
Not for me. I didn't see. I saw something on Audi USD that would have been a break even, but I didn't really see much high momentum stuff going on today until the news hit, which is I was waiting for the news. Like I didn't want to look at the market until tomorrow because the market really hasn't moved that much. Like the movements have been really small, but it's not nothing to trend. And I know my strategy is a trending strategy, so I want a really trending market. Like even if you go on the 4-hour, prices in consolidation on gold. It's made a lower low, a higher high. I can make this thing move. Higher high, a lower low, and a higher high. So now you're in a consolidation range. Technically, you're not in a uptrend or a downtrend. So you know what? It probably might target here and then reverse here. It could come back here, come back and tap this again. But until we get a break in the BOS, we have really at this point, 2 consecutive BOSs, we don't really have a trend in the market, which largely means price is probably going nowhere. So right now, you're just pretty much playing ping pong with price.
Yeah, I see most of the like GU's even worse. Like it's been in the demand zone forever.
Yep. And that's how most of the market's been for the last 2 weeks. This week, last week, and the week before last, really. And we had, the event happened today. I just want you to notice something real quick. Look at how big these 2 candles are compared to every single candle from here to here to here. There's nothing that big. Closest one is this one. And if I remember, hover your mouse over this one real quick. This one right here. That was a news day, if I remember correctly. I don't remember. Let me double check. That was the 17th, February 17th. Yeah, that was a news day. Some kind of news came out that was impactful. Just can't remember what it was. No, it wasn't. Huh. Something was there. Maybe not. But that's about the only kind of movement that you really see. But outside of that, it's really not trending. It's just staying within consolidation. So lots of hours where it moved in consolidation ranges before actually getting some moves that actually, move one direction or another. But even if you look at GU is worse.
This was news right here, 28.
February 28th. That was consumer confidence, PMI, Richmond Manufacturing Index, CAD GDP.
Consumer confidence right here. Whatever. Oh, I believe I gotta stick to one pair. That's it.
Yep.
But I would have called a trade in here. I would have definitely called a trade in here.
Yep. But a single focus on one pair is not a bad thing, right? So you might have had a trade opportunity from this lower high to that lower low and catching this coming down. Or what time?
Right here.
You're on PST time, right?
Yes.
Okay. So right here, you say you wake up around 4 o'clock. Yeah. You might have had an opportunity right here if you would have catched that continuation. And especially with today's news would have sent it down because the dollar is going to be strong. So
yeah, 450. Oh well, it's all good. So you haven't traded in 2 days, huh?
Nope. I will start looking back tomorrow, hoping that market breaks out of some ranges that it had built. Because now with at least today's candle, it definitely did. So I was looking to see if I got something tomorrow, but I noticed the market wasn't moving early on. So I said, heck with it. And then today it was definitely for me a non-trading day because I knew I was waiting for this news to pass. So, but guys, appreciate the time, appreciate questions and conversation. This video will be up on YouTube. So if you happen to miss it and want to replay some things, definitely check it out on YouTube. Make sure to join through our Launch Pass link now that we have, and so that'll get you to the membership for Discord. If you have any questions, feel free to ask them any questions in Extra, guys. Some people send me DMs, and I appreciate the messages y'all have, but there's a lot of information. Somebody's asking a question that somebody else wants to know the answer to, but they're just maybe afraid to say it. So I always prefer that you ask in Discord rather than my DMs, so that way we can answer questions that you may. Somebody may ask me a question that you have, or you may answer and get a question answered that somebody else has. But definitely want to help and make sure that everybody has a great trading year, trading week, trading month, etc. So wish y'all the best. Be safe in your trading, guys. Remember, this is a marathon, not a sprint. So don't force trades. Don't force trades that you don't have to take, guys. And with that, I will talk to y'all guys later. See y'all on Discord.